Financing, a discussion here for the next few minutes, financing the operating expenses of your business. And here to visit with us about it is Bill York from FarmOp Capital. Your firm is fairly new, right, Bill?
Yeah, we've been in business. We started in 2017. We're just beginning our fourth season. So, yeah, we're new to the farm lending space.
I just thought it was so appropriate to talk about it during harvest season because you folks take a little bit different approach. You're ready to finance farm operating expenses right now instead of waiting till the winter time.
Yeah, that's we believe it's very important to have the option to finance early. So we've got a number of 22 crop loans already on the books, ready to go. We think there's a significant economic advantage to be able to be a cash buyer, to lock in some of those inputs, to make sure that you're ready to pick up, retain or pick up additional rented land. I think it is very critical to have that flexibility.
Your approach is different from a number of standpoints. You really want to work with that multi-generational farm that in many instances is renting quite a bit of ground, may not necessarily own so much ground.
Yeah, and we looked at the growing segment of operators that that rent more land than they own, and we know that segment continues to grow substantially, and that segment generally has some challenges meeting traditional loan metric underwrite. So what we're looking at is their ability to produce the crop. We're still looking for top-notch farmers. We're looking for their risk management strategy, whether that's their crop insurance, and we look very closely at their marketing plan to lend on their ability to produce and the risk management tools they have in place. We're not relying on their balance sheet because that, for many farmers, that does not work very well.
Sounds almost like heresy in the banking industry, not relying on a balance sheet. Yeah. But you want to see a productive farmer, a profitable farmer, and you look at a number of dynamics there.
Yeah, and I've been lending on agriculture for 40 plus years, so I understand the balance sheet. The balance sheet really is the story of the history of that farm and how they built equity over time. I have, as a lender, having a strong balance sheet is not a bad place to be. But for an operator that's looking at really leveraging efficiency and growing their business, it's difficult, as you know, to build equity in real estate at the current prices. So we want to look at their ability to produce a crop. The primary credit metric for any lender is their ability to produce and pay back a loan. So that's what we're focused on. And our model fits well, as you pointed out, with multi-generational farms where you've got that next generation coming along, good productive farmers. The balance sheet may stay with the parents in terms of their lending, or they're growing to incorporate that next generation, and the parents want to be fair to the farming versus non-farming, and since we're looking at their ability to produce a crop and other risk mitigants, we can lend and not mess with their estate plan.
FarmOp.com is the best website, or FarmOpCapital.com?
FarmOp.com.
Thank you for the visit, sir. We appreciate it. Visiting with us in the studio, the Chief Executive Officer of FarmOp Capital, Bill York.